What's going on, everybody? It's Johnny here from GG Trades, and welcome to the first video of our Stock Market 101 series. This series is for all of those new traders and investors out there who are looking to get into the stock market, but you guys want to know what the stock market is, how it works, and all of those fundamentals that you should know before you start trading and investing. So without further ado, we'll jump into it. So in this first video, we will talk about what the stock market is, how you can get started, a bit of the pros and cons in terms of what the beginner brokerage recommendations are, and then we'll be going over, which is probably the most important part about this video, is what stocks versus options are. So all of those new traders and investors, you guys have probably heard a lot about stocks versus options, so we'll break it down for you and tell you the biggest pros and cons about each. Then we'll be going over a trading example in terms of, how are you going to buy and sell, and then what you can expect from this series. To kick things off, let's go through a top-down view of kind of how the stock market works and, what exactly is a stock market. So up on top, you have the entire stock market. Within the stock market, you have companies that offer you the chance to invest in them. So, of course, I've labeled here company A, B, and C. You can think about whatever companies you want. The big companies, they most likely have a chance for you to invest in them. So, company A, B, and C, what they do is they offer you shares. And, this is where a lot of the long-term investors come in. This is also where a lot of, short-term swing traders come in as well. And within these, you also have options contracts. So within the stock market, this is where all of the retail investors come in. They buy shares, they buy contracts, they work for short-term and long-term gains. So essentially, these companies list themselves as public on the stock market. Us retail investors come in, and that's up to us to decide whether or not you want to invest in them, because companies, if you want to invest in them, you buy their shares, and it mainly leans towards what are the good companies that you think will be here for a long time. And if you really believe in the mission and the vision of the company, then of course you're going to buy their shares, invest in them long term. And when it comes to options contracts, this is where people play for a lot of those short-term gains. A lot of the shares, those are for long-term investors, but people also swing trade shares. So really, this is a top-down view of how the stock market works. You have the stock market, you have companies that give you the chance to invest, and this bottom level here is where the retail investors jump in. And whether you want to invest in them long-term, you'll buy the shares. Or if want to play them for a short-term profit because they have some big project coming up that people think is very valuable, you might buy their options contract. So that's really how the stock market is, and up to you to whether you want to invest or you want to play them short-term. It's really up to you. So how do you get started in the stock market? Well, this is broken down into 3 very simple steps. The first being opening an account with the brokerage platform of your choice. We will be going over our recommendations for beginners all the way to experts on the next slide here. The second step being depositing your money, and the third, trading and investing. And of course, there's more to this, and that's the whole purpose of this series. We will be teaching you guys the basics when it comes to the stock market. General info: the market hours apply for Eastern time. They are open Monday through Friday, with of course the exception of national holidays. Pre-market hours are open from 4 a.m. to 9:30 a.m. The core market hours, which you will see the most activity in, is 9:30 a.m. to 4 p.m. After hours is 4 p.m. to 8 p.m. And an important thing to remember is that brokerages have different hours for trading. So these hours, they apply to just the market in general. However, brokerages will likely limit their hours to certain times. And you will see that as you sign up for brokerages, you'll know their hours. So these are the 4 recommendations that we have when it comes to brokerages. The first being Robinhood. Now, Robinhood is a very simple, easy to use brokerage platform that, it contains all of the essential information when it comes to somebody who is just starting to get into the stock market. When it comes to the more advanced information, Robinhood does not include this. But if you are somebody starting out, Robinhood is a great platform to start with. It has all of the basic information that you could possibly need to get started in the stock market. Now, for Webull, I recommend this for people who are beginners and they want to move towards being, more of a technical trader, more of a technical investor, mainly because they give you a lot of customization capabilities. They give you a lot of those technical informations, that Robinhood does not offer. However, if you are just starting, I still recommend Webull because it's still easy enough to use that you'll get all that essential information. And the platform for them, both on mobile and desktop, is fairly user-friendly. Now, when it comes to Fidelity, I still keep this in the beginners to intermediate category, mainly because it's still easy to use. Fidelity actually still has a lot of market insight. And, for a beginner, they still give you a lot of that beginner knowledge. Right from when you open an account, they'll give you the tips and tools that you need. That's why I keep it here. However, I keep this in the intermediate category because they still have the capabilities of, those more advanced traders as well as investors. And one thing to actually note is that Robinhood and Webull, they do not, charge commission when it comes to trading contracts, and or more of those stocks that are sold from different countries. However, when it comes to those stocks overseas and over countries, Fidelity and E-Trade, they do actually charge a little bit. When it comes to E-Trade, I say this is an intermediate to expert because this actually does require more knowledge to, one, of course, have your own trading and investing setup, as well as really being able to understand all of the in-depth market insights that they do have. And, a lot of the customization that they have is for those advanced traders that want to be able to monitor multiple stocks at a time. And, I'm not going to get into too much detail because this is, of course, supposed to be, just getting started part. But when you do get to the point where you are, an intermediate investor to an expert investor trader, E-Trade is a great recommendation. So I've actually used all of these myself. And, these are my top 4 picks in terms of the brokerage platforms that you can use all the way from when you're getting started to when you become a more experienced trader investor. So when it comes to stocks versus options, this is a very critical concept for people just getting into the stock market to understand. When you are purchasing a stock, you are actually investing in a company. And when we go to the stock side, whenever you buy a stock, whatever you are holding will always have value, whether it's a penny, whether it's $1, whether it's $100. The point is the stock will always have some type of value unless it gets delisted, unless the company takes their shares off the market. The stocks will always have value. And when it comes to stocks, the overall sentiment and the overall part about stocks is that it is for long-term growth. When you buy a stock, it is a stock that you genuinely believe is a great company. You want to continue investing in them. And that is why the long-term perspective, it applies when it comes to stocks. And I say that you ignore the short-term market trends because in the long run, the stocks that you buy are supposed to grow and they're supposed to become a better company. And, that's why you are investing in them. One thing about stocks is that, it takes a little bit longer to see huge growth. And that is because, sometimes companies have pullbacks, sometimes companies have things go wrong, so their stock value goes down. But overall, in the big picture and in the grand scheme, it's going to go up. Of course, you will hear that a lot as you get into the stock market and you do your research. You'll see that, stocks only go up. But in the grand scheme, it's kind of right for, I would say, 95% of the stocks. And when it comes to this 4th point here, this will always matter, and the stocks is what I'm referring to, is, it always matters whether you trade the option side or not, and I'll explain that in a little more. When it comes to opening doors to your market exposure, you want to invest in stocks in multiple industries, and you will have your money invested when it comes to different types of companies, and that's what I mean by exposure. You want to invest in multiple companies, you want to invest in the different industries that you believe have a solid path to future. And essentially, the market exposure is what will help you grow your long-term portfolio in the long run. Now, when it comes to options can go to zero because they have an expiration date. So when you buy an option, there's an expiration date on it. If you hit it, then you might get a big short-term gain. However, if you don't hit it, it can always go to zero. You lose that money, and that is the one thing you need to understand about options. When you buy an options contract, you need to understand that it can always go to zero, and you can possibly lose that money. For options, it is a short-term play unless you get a long-term contract. For the most part, options traders usually trade in the short term. They want to look for those short-term gains, which is why this point here says that it requires a lot of short-term attention. And in the opposite side of holding stocks long-term, You can get larger short-term gains. However, it's much more risky. You need to know what you're doing. And we say more risk because, of course, it can go to zero, and that's why it has more risk. So when it comes to the option side, it's going to be included in the series as well. We'll go over the basics. We'll go over all of those little things about options you need to understand. But in the bigger picture, you need to understand, yes, you can get larger short-term gains, but it is much more riskier. In my opinion and the GG Trades philosophy, we personally think that you should always start a long-term portfolio before you start trading options, mainly because you want to ensure that your money is growing somewhere before you start taking those riskier options plays and you start looking for those short-term gains. Now, for options, you are actually not investing in the stock. The only way that you can invest in the stock is if you buy the actual stock. So options are actually not the stock. It is simply more of an asset or something on the side to the company that you are betting on. So the main point is when you are investing in stocks, you're investing in the company. It's a long-term perspective that you should really keep in mind. When it comes to options, it's the short-term gains, but the whole point is that it is much more riskier. So you want to get the best of both worlds, which is why, we say that you should start a long-term portfolio before you start trading your options. To give you a quick demonstration on, what it's like to buy and sell on the Robinhood desktop app, I much prefer their mobile platform, but, this is what it looks like on desktop. So if I wanted to buy another share of this little free stock I got on this little dummy account that I have here, all I would do is go to the page. I would go to the order entry box, and every brokerage has something similar to this. I would input the amount that I want, and if I wanted to hit review order, I would hit the buy button. It'll send it to the market, and then it'll fill me, and I'll get my share within either seconds, minutes, really depending on the type of order. And the type of order you can change here, and we'll be going over what these different types of orders are later in the series. But if I wanted to buy this share at market price, I would just hit review order, hit the buy button, it'll send it to the market, and I will get my share at whatever price it fills me at. To give you guys a sneak peek into what you can expect from the rest of our Stock Market 101 series here at GG, these bullet points listed here are pretty much everything we're already preparing content for, and we've got a lot more coming to you. Some of the things you can expect first are the types of orders, and as you guys saw in the previous little buy-sell demonstration that I had, there are different types of orders to submit to the market, so it's extremely important to understand what these orders are, because that's the difference between $100 and $1,000 depending on the size of the order you're submitting. For the essentials and the resources of investing and trading, a lot of the brokerage platforms don't offer a lot of the capabilities of the third-party resources and applications out there, so we'll be going over a lot of the resources that we use in the GG community. For options, we are going to be having a little bit of a mini series for this because there's just so much to options, and we're going to break it down, and we're going to make sure that you guys understand a lot of those basic things before you start trading options. For indicators and strategies, we'll go over a lot of the basic candlestick patterns, chart patterns, and things about technical analysis. For all of the lingo, slang, and jargon of the stock market, you'll see a lot of it as you're doing your research. So, of course, we'll make sure that we give you guys a breakdown of all of those little words that you guys will run across. For investing and trading management tips, we'll go over a lot of the things that have been successful in the GG community. So we're gonna share that with you guys, and hopefully that helps for you guys. Besides that, thank you so much for tuning in to the first video of the Stock Market 101 series. We've got a lot more coming. Let us know down below in the comments section if you guys want us to go over anything specific for beginners. We'll drop a Discord link down below as well if you guys want to come check out the GG community. We've got a lot going on. We've got a lot of tips and tools and members coming in. And we're excited to really start growing this community. Thank you so much, and we'll catch you guys in the next one.